Welcome, everyone. Welcome to the CoinRock Show. It is Tuesday, and let's get going on Tuesday's news. We have a guest joining us in about half an hour. It's going to be a very, very interesting conversation. Welcome, welcome. Let's push this out to the different groups. It is Tuesday, and the market is looking pretty good. Look at all that green. Look at that green. So yes, the team, you can push that out to the different groups. And we'll get going in a few minutes here. We are live. All right. And there you go. So Tuesday, let's have a look at some of the news here. Welcome. I hope everyone's doing well. It's always interesting to see how the mood changes when the price changes. It's let me just move you guys up here. I have a big screen in front of me. Let me move you guys in the middle. There you go. So it is very interesting to see. Humans never change, right? We're always the same. I hope you guys have evolved and changed from day one as an investor, especially in crypto. There's so many things here that, in this industry that things change so quickly. You have to be able to change and pivot quickly when it comes to new narratives, new updates, so many things. We were talking about this morning with my partner Caius, partner at CoinRock. What's interesting is the market has changed so much over the last 18 months. It is unrecognizable. Just the fabric of the industry itself, the amount of coins out, just the behavior that investors have when it comes to buying coins, holding them, trading them, or not holding them. And it's been very interesting to see the evolution. If you have been patient and if you've safeguarded and protected your capital over the last 5 months now, since early Jan, right? Since we started seeing, so after Trump launched the meme coin, if you have not lost all your money and you still have money to play with, you are good. You deserve to win. And I think that's something that's very underrated. Just the idea of surviving, in a market that's been very PvP for about a year now, and a lot of people, including big accounts, have crashed out. I personally know many people who were successful in the previous cycle who have either left the industry or who've had to completely change and relearn the trading strategies they had, and change completely based on what the way they made money in the last cycle, because the fabric of the market has completely changed. I think Pump Fund has had a fundamental change on the structure of the market itself. Seeing 20, 30, 50, 60,000 coins. I think it peaked around 50 to 60,000 new coins in a single day. Might be more, might be less, but around, definitely in the tens of thousands of new coins every day. That changes the way the market behaves, right? So if you go back to 2017, and then, we had like a few hundred coins, I think it was 300 to 400, if I remember. And then 2020 and 21, a few thousand coins. I think it peaked around 6,000 or 7,000 coins. Now there's 10 times that the amount of coins launched at when the market is hot in a day, tens of thousands a day. So of course, with that, there's a lot of, and you guys have noticed this, people trade in much shorter time frames. They buy and sell much quicker. They they don't know how to hold projects anymore. It's very rare, right? So the belief is still there, right? So good projects still attract capital. Good teams still attract capital, and quality holders and quality communities. But overall, I'd be interested in seeing if anyone has any data when it comes to the average hold, like the average time held in today's it. And we talk about the word cycle, the 4-year cycle, which I think is dead, the concept. And you've heard many smart guests on the show who've been very active in crypto for the last 10-15 years, who also say that the fabric of the idea of the 4-year cycle is dead, and that's now replaced by shorter cycles, cycles within the cycle. And what's interesting is really it's interesting to see the changes when it comes to how people behave with 20,000 new coins a day, whether it's on Pump Fund or other token launchers, or just it's become much easier now to launch any coin, even to create your own coin, right? Because there's more knowledge. That's great. There's YouTube videos where you can literally teach yourself how to launch a coin. Of course, people learn very quickly that there's a big difference between launching a coin and successfully marketing it, building a community, attracting capital. So I'm very excited here to have Laura on the show. That will be in about 20 minutes. We'll talk about VC, a lot of VC stuff, because she is Chief Ecosystem Officer at Gate.io and principal at Gate Ventures. So we'll talk a lot about VC stuff and kind of the the evolution of venture capital, which is something that we see too at CoinRock. Even the deal flow that we have been seeing over the last 12 months has changed when it comes to vesting terms and allocation, and the amount of deals is, of course, very dependent on how well the market as a whole is performing. So it's definitely a very different market than 18 months ago even. So what's coming next? I hope you guys join these shows every, we do these 2-3 times a week, because we have amazing guests. A lot of these guests, the majority of them are doers. They do the investment, they build, they advise, they work directly with governments, directly with lawmakers. And that's what we wanted to bring here with the CoinRock Show, is really bringing you people who are behind the scenes. Some of them are public, some of them are extremely well connected, that basically everyone in crypto, everyone, all the OGs. And some people you can't get on shows, like you can't talk to them. You have to listen to the podcast here, join the show to hear them and their ideas. Some of them, like I said, have been working with governments for the last 10-15 years. Some of them were early, part of the XRP Ripple team. Some others were early on the ETH team as advisors. So it's a lot of work to do these shows. You just see these shows 2-3 times a week, but on the back end there's a team working to bring these guests to you, and to then produce the content that goes on socials. And congrats, props to the team, because it's you only see the tip of the iceberg here. And I just get to show up and talk to really interesting guests, but behind that there's a lot of work done. So where is the market going from now? I think, again, look at what happened over the last few days. Trump came out, was it Thursday, Friday last week, with that tweet saying that he's imposing new tariffs on the EU, and within minutes the market crashed, right? And then if we have, I'm pretty sure I think I shortlisted, yes, this one here. Bitcoin rebounds. This is yesterday, right? So Bitcoin surged back above 109K on Sunday night after Trump announced a delay to the proposed 50% tax. I do think, and this is kind of the rumblings of other people very high up in crypto and very well connected, there's a bit more of this kind of frustration with the way the Trump administration is playing the tariff game, and more of like WTF, like what the fuck is this? I think a lot of like, okay, you play the tariff game from January to April. You gave a 90-day window to kind of find deals and make these trade deals, and now you're out of the blue pushing again 50% tariffs on the EU right when the market was starting to pick up a bit. There is a sense of frustration when it comes to people on the whether it's on the institutional side. I think that if you blindly think that, and you've seen those memes on Twitter probably, right? You've seen this is what I voted for. And look, I'm not American, so I didn't vote for anything. I'm just I'm in a position where I can just comment and basically be the commentator on what's happening. Of course, we have a vested interest in general to see the markets and stocks, everything, right? If you're pro business, you're pro Trump. If you're pro business, you definitely were not pro Kamala. That being said, there is frustration and growing frustration within many business, many industries, many business communities that are like, what is going on here? Like, can we not destroy the market every other week, and just when there's like some sort of bullish momentum, just nuke everything down again? So it is frustrating to see this. It's frustrating for many, builders, founders, investors. We talk to a lot of founders too, of course, who looking to either launch projects or raise or just want advice. And there is frustration, of course, right? Because you want to see this kind of, again, let's be real. Trump was really the first and is the first pro crypto president, but the tariffs being mentioned every week or every other week with seemingly no strategy. And I think that's what's becoming a bit more apparent lately, is as soon as there's a bit more stability, you see a headline of like, hey, 50% tariffs next week on the EU. Doesn't help the market, doesn't help investor confidence, doesn't help certainty. So, of course, you can be pro Trump and you can be MAGA and all that. That's fine. But I think that what's happening now is, after months of seeing this, I have very good friends in the US who are extremely pro Trump, and even there you can see the cracks. Like, all right, can we stop tariff? Like, can we stop nuking the charts every other week, please? So let's see. I mean, for us, our view is nothing has changed in the mid to long term, extremely bullish overall. The short term is everything. Everything depends on Trump's tweets. That's it. Simple as that. Following a weekend call. So the original tweet, I don't think we have it in this article, but basically Trump saying, hey, 50% tax next week. And I think like first week of June or something. And then this came out on Sunday following a weekend call with the head of the EU. Trump agreed to push the tariff deadline to July 9th. Of course, the market shoots up again. So, the S&P rose almost 1%. NASDAQ climbed 1%. Bitcoin hit, so went from 106, 107 up to 110. So yes, there's again, it's nothing has been settled in terms of the tariffs. We might see this for weeks and months. We've seen this for months, by the way. So, as much as we want to believe that everything will be solved quickly and that everyone can, unite and be up only, this could end tomorrow, right? Trump basically decides when this ends. Interest rates, of course, are a concern. I mean, nothing's changed. I think everyone here should watch the show we had last week with the Peruvian bull. That was one of the my favorite shows that we did over the last few months. A lot about macro, QE, and everything. So you can find the recording. You can find the recording on Twitter for sure, but I know that they're either finishing the article with the link, or it will be done in the next few days. That was a great overview of the macro situation right now. I have no doubt from our position is very clear. QE will resume at some point. The only question mark is when is the at some point? Is it a week, a month, 3 months, 6 months, 12 months? When, and it's not if, but when will the tariffs be more defined? And that's also a big deal. But the mid to long term, nothing changes. Short term, of course, in the coming weeks, it's going to seesaw as long as Trump wants to remove the tariffs and add the tariffs. That's basically the market will just react to that. So a few headlines here quickly before we'll take a break in about 7 to 8 minutes. Then we'll come back with Laura on the show here. So again, while everything's happening, while the uncertainty keeps coming, like going back and forth, right? Bitwise here forecasts $420 billion in Bitcoin inflows by the end of the year, by 2026, as institutions line up. This should not be a surprise for any of you if you watch the CoinRock Show. We've had guests who work directly with these institutions, literally advising these institutions. They told you. They said, deploying capital for these big companies takes 6 to 24 months. As soon as there's more clarity and less fear, more regulatory clarity, there will be a lot more money coming into the market. That being said, there is no framework yet. It's still, everyone's still waiting for it. Like I say this maybe every week. What I'm hearing is August, September for the full framework. That should, if it's well done, hopefully it's actually a very clear framework with clear guidelines. That should be the catalyst to kind of persuade and almost alleviate the fears that institutions have when it comes to investing, either offering crypto as a service or buying Bitcoin or buying the ETF. So yes, while this fear and while the uncertainty is still lingering, and the market is literally watching Trump's tweets, this is not stopping, right? The institutional interest is not stopping. Let's have a look at something here. And then this was funny, right? Australian senator calls Bitcoin a Ponzi scheme. It's almost like these guys want to have like this is like a 2015 headline. This is 2025, dude. Like, there's so many assets that could be called a Ponzi scheme. And this guy, I think he tweeted something. He said, oh yeah, this is a Ponzi scheme because you can't eat Bitcoin. Bitcoin will ultimately go to $1 million. Why? Because he's not wrong. I firmly believe we will see Bitcoin at $500K to $1 million. The only question is when. But caveat, not this cycle. I'm not seeing this in the next year or two. Probably in the next, I'd say 4 to 8 years. I don't see how, barring a cataclysmic disaster, I don't see how Bitcoin doesn't hit 500K, probably a million. So he says, yeah, because it's a Ponzi where BlackRock will pump more and more dollars into a supply constrained product. Yeah, I mean, that's kind of the plan. I mean, they've said it. This is like not a secret. It's like this guy just came up one day. He's like, hey, it's a Ponzi because BlackRock's buying it. It's like, yeah, BlackRock's also buying real estate and houses. And so he added, you can't eat Bitcoin, suggesting that the asset lacks real world value or utility. I don't know, you can't really eat gold either. Actually, you can. Take that back, guys. You can actually eat gold. You can go to expensive steakhouses and they will give you these, like a bit of gold, like some gold powder on your steak. So you can actually eat gold. Maybe this guy's right. or maybe he's just looking for attention, and we just gave him attention. I thought it was funny to say, like, yeah, this is a 2015 headline and we're in 2025. Let's have a look. Bitcoin hovers below 110K again. You know what's interesting about this this year, I'd say the last 12 months, is Bitcoin is at $110,000 and no one gives a shit. No one cares. No one cares. It's retail's not here. Your friends aren't texting you to which meme they need to buy. If you look at Google Trends, which is always a very good indication of the state of retail, no interest. There is no interest. We haven't seen euphoria, and yet we see Bitcoin sitting at $110,000. So again, that's why a $200,000 target, when we're seeing 110K without any bullish catalyst, without any clear framework from a regulatory perspective, without any retail interest, yeah, 200K is actually extremely realistic in the short term. So not in the next few days, but in the next few months, I'd say next 6 to 12 months. Of course, it depends heavily on the macro, but I mean, all the ingredients are here, right? Let's have a look at maybe another headline or two here. Crypto industry presses SEC for staking guidance. Yeah, look, this is we've been talking about this, right? The industry wants clarity. They want clarity from the regulators. Some countries have been very good when it comes to giving clarity. Others, to be fair, the SEC has been so shambolic for years that it takes time to actually get everyone together and publish something. So this is, the new head was appointed in February. Was it January? Trump came in January, appointed, I believe, February or March. It takes time. But again, everyone wants the same thing, just clarity, right? Guidance, clarity. And then another one here, and we'll end with this one. Take a quick break. France's blockchain group. So the blockchain group in France is basically the equivalent of Saylor's MicroStrategy, now called Strategy. They bought deepening his Bitcoin treasury strategy following a successful $72 million bond sale with plans to purchase an additional 600 to 590 BTC. The announcement was made yesterday, and the firm will be holding 1,437 BTC. So I believe they're Europe's, cementing its role as one of Europe's most aggressive corporate Bitcoin accumulators. Very interesting seeing this. We talked about this. Saylor is a very good spokesperson, salesperson for crypto, for adoption, essentially for Bitcoin. And this is, again, this is just one company. So the $200,000 target looks extremely realistic when you consider that there's thousands of publicly listed companies in the world. And if and when they adopt a Bitcoin treasury strategy, they need to buy Bitcoin. So the buying pressure will, and this is on top of institutions, this is on top of, investors, like independent investors. And this is just the beginning of this movement. And of course, everyone in business is competitive. So it's going to be, hey, who owns more? So they buy more. So I think we'll get to a stage where we see hundreds of these companies owning thousands of Bitcoin, and they have to buy it. So yes, they can buy OTC, but they also have to market buy. So that's the update here. Again, this is a $70 million bond sale. Hundreds of companies can and will potentially, my view is, will at some point follow this, whether it might not be doing the full Michael Saylor strategy, but they will be adding Bitcoin. And so what happens when thousands of companies buy Bitcoin? And so this will spill over not to your memes, by the way. I don't see these companies buying memes. Maybe the top ones, maybe the biggest ones. We have talked about on the show a lot about Bitcoin, of course, being number one, and seeing some carryover to ETH. Those are the two institutional assets as of today. Will Solana move into that category? Will XRP? We'll see. As of today, the conversations that we're hearing and having, it's basically Bitcoin and Ethereum that's getting the most interest. All right. So with that being said, let's take a short 5-minute break. We will be back. Stay tuned because we have Laura coming up in 5 minutes, Chief Ecosystem Officer at Gate.io and Principal at Gate Ventures. I will say that Gate.io did not pay us to do this. This is just like an interesting conversation that we'll have essentially about the VC space, what she's seeing on her end. So stay tuned. We will be back in 5 minutes. Hey, Matthias here, and if you're enjoying this and want access to even more alpha, early stage deals and opportunities, and also behind the scenes insights on the markets, hit the link in the description and make sure you're subscribed. It's free and it puts you ahead of the curve. Let's get back to the show. All right, welcome back everyone to the CoinRock Show. We have Laura who is backstage here. She's gonna be joining us in a minute. Laura, give me a thumbs up if you're good to go and we will add you.
Hey.
Should be good. Welcome to the CoinRock Show.
Hey, Matthias. How are you doing today?
Good. So we have let me put you on the big screen. There you go. Welcome. We start these shows always by reading the official bio, and then the floor is yours to tell us your story, and then we'll just take it from there, basically.
Okay, sure. Please go ahead. Read. I wonder which bio you have. So I'm very curious what you're going to read.
All right. Let's see a surprise here. So Laura is an award-winning serial entrepreneur, investor, and keynote speaker, sharing her insights on Web3 since 2016. So OG in the space. She currently holds a dual role within the Gate ecosystem, managing global growth of the exchange and attracting new investments to its venture arm, GVC. In her position as CGEO at Gate.io, she builds cross-border partnerships, and as a principal at Gate Ventures, Laura oversees investments, partnerships, and development of the fund. She was also named one of Forbes 30 under 30 blockchain visionaries, recognizing her impact on the global crypto ecosystem. Impressive bio.
Like, next time I need to be presented, I will just, hire you, Matthias, to read this out.
That's it. We do it well. We do it well here.
But
welcome
here. I mean, you kind of presented everything who I am. I mean, I've been in space since 2016. I came for go-to-market kind of perspective. So back in the day, I helped a lot of ICOs being launched. I don't know if you remember those days when, a Wild West, we had 3 devils: website, white paper, and a wallet. And you raised insane amount of money within a week. So I came literally fresh out of college into those days. And then it was like, do you really want to build a career in TradFi, all of these, conventional industries? Because my background is in science. I have a Bachelor of Physics. Or should I go on this roller coaster ride into crypto? And I was like, crypto it is. And everything else, well, you kind of presented. I work with Gate. We actually rebranded. We're now Gate.com, not Gate.io anymore.
Gate.com. All right. You know what we say Gate.io because it's become such a it was the first .io in the crypto space. So everyone knows Gate.io from the previous cycle, especially.
Oh, we're getting mainstream. We're going more into kind of Web2. So we rebranded to Gate.com. I need to get used to it as well. The rebrand happened literally last week. But yeah. So basically,
this is fresh. Okay.
It's very fresh. Literally, sometimes I need to present the comment Gate.com. So basically I hold the dual title. As you mentioned, I focus mostly on the investments. So not a lot of people know, but Gate has the venture arm called Gate Ventures, and we act as a traditional VC. Just one kind of small difference about us: we invest our own prop capital, and we do early stage investments anywhere from pre-seed to Series A, mostly tokens. And our average tokens are anywhere from 100K to Emil, and we support we support a lot of founders, but mostly would be into infra, DeFi, PayFi. Now I'm most excited into stablecoins. And yeah, basically that's about us. Not a lot of people know about Gate Ventures, but I'm always happy to promote it as well.
Nice. Yeah, so one thing I will say to the audience here is Gate did not pay us at all. So this is not a paid endorsement of Gate or a paid partnership. This is just like we reached out, you're actively behind the scenes and also front facing when it comes to partnerships and everything. We said it would be great to talk openly about what's going on in the market, what you're seeing, and bring your perspective to people who, especially at a time in the market where there's a lot of fear, a lot of uncertainty. Since Trump came in, I think everyone was waiting for alt season. I'm sure you've seen the memes like, when alt season? Oh, ETH is coiling up, alt season coming up. What's your point? What's your view, actually, your read on the market? What are you thinking and seeing?
So, I get this question asked every single week when I go to interviews or do any panel discussions. And it's a very interesting market. Because on one hand, we see the person who is the head of one of the most powerful nations in the world are literally promoting meme coins during his own cryptos. He hosted his coin holders dinner literally a week or 2 weeks ago, even though a lot of people were disappointed about it. But he's openly endorsing crypto. Then SEC is dropping charges on a lot of different exchanges and other players. Number 3, we have institutions coming into the market and pumping at least Bitcoin price. We have all-time high right now. So we have all of these kind of positive signals on one hand, but on the other hand, where is the altcoin season? So why only Bitcoin?
Where is it?
When are all our bags gonna be pumped? And there are many reasons why it's happening. First of all, I've been in this market for almost 10 years. I can't comprehend 10 years in this market. It's crazy. And in the previous cycles, we had 100 coins launching to maybe 1,000. Now, anyone who has access to the internet and has access to Twitter can literally tweet to create their own coin. There's so many new things happening every day that liquidity is so scarce around. And people are not trusting all these altcoins the way they were trusting before. We know Bitcoin is lived throughout ups and downs. Ethereum lived around. Yes, Ethereum still needs to catch up, but it lived throughout it. Even XRP, that doesn't really have any kind of utility.
I know people hate XRP, but it's battle tested. It's been around for several cycles now.
Or you know what? Cardano. Everyone says Cardano is dead all the time. Well, it's still on the top. And still there is a lot of holders. People want to invest in something they trust that's been throughout the years and is already blue chip coins, rather than speculating with all of these altcoins. And the problem is when the liquidity is so scarce and institutions are only doing Bitcoin and maybe Ethereum, if they're making money, they're not cashing out and then investing in altcoins. Why we had altcoin seasons last cycles? Because people make money in Bitcoin, then there were crazy whatever all-time highs they had, and they're like, oh my god, I'm rich overnight. And the thing is, if you become rich overnight from the psychology perspective, you don't understand the value of the money. If it comes so easy, you don't feel like you had to put a lot of work, so it's very easy for you to reinvest, because you're like, okay, I made just 10x, 20x, I want 50x, I want 100x. That's the psychology. That's the psychology of gambling as well. That's why I'm always saying, be careful trading memes, be careful trading everything, because it's very, very, very risky. And again, I come from exchange perspective. It's very risky. Right? You have to be very careful about it. So basically, people made these crazy multipliers. They felt invincible, and they're like, okay, let's put into the shitcoin. Let's put it left and right. And that's where we had this altcoins news. Whereas right now, when the market is a bit turbulent, we don't know what's going to happen next. Plus, one more thing, gold. Gold is all-time high. What is gold? Gold is basically something where people invest when they think it's going to be times of uncertainty, where they don't trust usually the stock market. And now we have this very weird dynamic. Gold is all-time high. Stocks are doing quite great as well. And then crypto is doing well. So There is one part of the world thinking, oh, there's going to be doomsday, what's happening with all the wars and with our economy, because a lot of people are saying we're heading into recession, and there are multiple factors about it. But on the other hand, we have the president of the most powerful nation who is like, no, I need to make sure my buddies are going to be rich, and I need to make sure everyone's getting their backs pumped. So it's a very interesting market, I would say.
Yep. No, I agree on everything. I think that I was just saying this actually before the show. We see 5 to 7 times more coins created this cycle than the total amount of coins in the previous cycle. So of course, where's that money going? There's if you have 1,000 glasses on the table versus 3 glasses, of course each glass is going to be difficult to fill up. So it's a very different market structure.
Plus, one more thing I might add, like we have this joke one of my friends says. So you see a lot of these tokens they launch, and there is this chart of Burj Khalifa. Again, I'm quoting one friend of mine. You have a couple of green candles, and I have this beautiful kind of red candle. See, just going down, 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 like a Burj Khalifa from Dubai. Like, projects launch at a super high valuations. Like, you're raising capital first from like VC and all their other rounds with like $100 million, $500 million valuation. And then when you launch, you have the sell pressure for all the investors, all the CALs, because CALs are getting usually huge unlocks at the very low valuations. They're all selling. You are here at the high FDV. How are you going to sustain this price? Where are you going to get the buy pressure during those couple of days on the launch when everyone's selling? Because again, one more thing, what I'm always saying is when you go and raise from investors, from all of these CALs, you're taking a loan. You're taking a very, very expensive loan that you have to repay on the day on the launch. And are you ready to take that loan that is going to basically cost you 10x your investment? Because if, let's say, you're raising for 10 million with CAL around, and then you're launching 100 million, that's 10x loan that you have to repay and get so much buy pressure in that couple of days. Because if you're not going to manage that, that's it. Your chart is going to go down. Your token is going to be down. It's going to be very, very hard to recover it. I come from marketing background. I helped so many project launch before coming into Gate. I had a marketing agency as well. Like, I know what it's like to have this buy and sell pressure kind of dynamics on the day of the launch. It's insane. And then you have market makers, and some of them don't have your best searchers, again, depending on the model, as a retainer or a loan model. Like, they're betting against you sometimes as well. So
of course,
putting all of that kind of equation into one big pot, it's really, really hard to launch. And it's not 2016 anymore, like not 2018 even, or 19, where you could have a half-ass project, do a white paper, and then raise 50 million, 100 million in like a week, and then launch and invest like a couple of mil and pump the price. It's not this market anymore. The market matured. You need to be a much more mature player to succeed.
Speaking of that, where do you think the market is headed when it comes specifically to VCs? You open the VC door, so let's go into that one. What are you seeing? Of course, it's changed a lot over the last 24 months. What have you seen, and where do you think it's going?
So one key kind of thing I want to mention is the market is shifting in the way that VCs are making less money right now, especially from venture investment. It's last cycle venture investment. Like, even if you did a spray and pray model, and spray and pray model, for those who don't know, it's a model when you invest in a lot of different companies, very small amount, and you hope at least one of them is going to kind of repay not just principal, but make you a multipliers. You would make money. This market, again, for all the reasons why I mentioned before, VCs are not making money. They're choosing not to invest in these crazy valuations, and what they're doing, liquids. Now, I would say 78% of VCs in my circle are doing liquid investments. They're focusing on top 20 market cap projects going in. I'm sorry if there is background noise.
No problem.
Okay.
It adds to the show.
I have 2 little babies that are playing right now, literally in another room.
All good.
So basically, these VCs are choosing liquid investments because it's very easy in, very easy out. Because again, let's kind of do the simple math. Let's say you're a project, you're raising at whatever valuation. Let's say 50 million is kind of the average one we see in the market right now at the VC stage. You, of course, launch at the higher one. You're probably going to launch at like 100 to 100 mil. You'll try. VCs are usually getting like the average terms are like maybe you get 10% on TG, maybe. Then you get the cliff, and then you get the vesting. And usually, cliff is like up to 6 months, and vesting a year to 2 years. This means me, let's say I'm a VC, I need to calculate first. I need to get my principal back. If you are raising a $50 million valuation, it means on the day of the launch, if I had 10% on TGE, you need to be at $500 million valuation. So basically, that's half a billion. Are we sure you can be at the $500 million valuation in this market for me just to get my principal back? We're not talking making money, just getting principal back. And then,
I haven't seen many in the last 12 months, maybe 1 or 2 at 500 on day one.
Exactly. And then will you sustain that price, or can you make sure it's not gonna again be the Burj Khalifa kind of graph for us when the unlock's gonna happen? Because when unlock is gonna happen, and let's say you raised, let's say 10 million, 20 million, that's kind of the average raise, all this 10, 20 million is gonna go into market. Will you have enough buy pressure to sustain the price? And the problem is, again, a lot of these projects, they're faking their volumes, and we know that that's a fact in this industry. Thank God some of the market makers were charged for that, because that's market manipulation. That's not allowed, and we cannot like basically allow it to happen in the industry. So just from the pure kind of math perspective, if you're coming in this valuation, I don't see how we as a VC is going to make money, especially if we're putting into the perspective that we're thinking we're heading into recession. We don't know when. Everyone was kind of predicting that this year is going to be the good year, and next year everything's going to fall down. Again, we don't know. If we had a crystal ball, I probably wouldn't be sitting here. We don't know that, but probably we have like a good 1 year, maybe year and a half. So will I get those tokens, at least some amount of tokens, to get a principal and then some sort of profit as well? And let's not forget the whole thesis of VC investment. VC investment thesis is high risk, high reward. Venture capital is all about getting that 5x, 10x, 100x. It's not about making 20%. If I want to make 20%, there's a lot of high yield bearing products where I can invest, play around. There's a lot of projects that pay, even 40% for short term because it's a marketing budget. I can just hop from that and get a 40%, but that's not venture capital. So that's why investors right now are those who don't have some kind of bylaws, they're shifting their investment kind of thesis to doing liquids, doing OTCs, or even yield-bearing products. Of course, we have another kind of interesting point that there are, I would say, more than 50% of VCs who have their LPs and have a mandate to invest. And when they go to their LPs, they're like, hey, like we want to change our fund thesis. We want to start investing in liquids. The LPs are like, no, we gave you the money to do venture capital investment. You must invest or give the money back. And who wants to get money back if they get to 220 model? And 220 model, for those who don't know, is like usually 2% management fee, 20% success fee. And majority of funds live off the management fee rather than success fee, because the cycle is just so long. So they don't want to give the money back, and then they're forced to invest into the bad deals. And that kind of creates this bad cycle. Bad projects get funded. VCs are not making money. Everyone's kind of losing their trust in the industry. More projects are launching. There's not enough liquidity. And it's kind of very bad cycle we're kind of going into.
I mean, I agree. We see the same things, of course, right? Because it's a very small space in venture capital. I think that, I think that the 2020 way of playing the VC game is over. The massive FDVs are over. So the question then is, what do you see happening in the next 1 to 3 years when it comes to VC?
I think, again, I work for a very different type of VC. We're back for the exchange. So we do a lot of strategic investments. We do M&As. So we do a lot of other things than pure investment perspective, or it's a strategic investment for exchange. But if we put like kind of GVC on the side and we talk about like all the regular VCs, those who are doing like 220 model or who are having their own capital deployed, I think they're going to change their model and they're going to become more like an advisories, where they would take and incubate the project. They might take more amount of in tokens. They might even charge some sort of fiat to basically sustain themselves and become like a venture studio slash BD slash marketing and an agencies all in combination to be able to sustain themselves and be more hands-on with a project rather than just putting the money there and waiting to get results. So that's one thing. Second thing, I see right now a big trend of Web2 people coming into Web3
Yep.
because again, media works amazingly. Media loves clicks, media loves clickbait, and you love these fancy headlines. And again, I was a writer for Forbes, I was a writer for Huffington Post, so I know what I'm talking about.
Yep.
It sells the most amazing headlines. And when you see these headlines, the 16-year-old just made 100,000 overnight trading this meme coin, or you hear the stories of how these college kids just raise 20 million, you're like, I want to be in the space. So there's a lot of
Yep.
Web2 people who have capital. TradFi people are coming into the space because
Yep.
they hear about these crazy returns. Even let's say yield-bearing products that offer you 20-30%. Again, everything is risky in crypto space, like you can get hacked or whatever, but in terms of all the possibilities where you can invest in crypto, let's say meme coins are the biggest, like gambling, and the riskiest one, and then let's say yield-bearing products are kind of the safest one, even though anything is in the crypto space. But for the sake of the argument, they're offering 30-40%. For someone in Wall Street, 40% per year, that's incredible return.
You would be the number one fund if you do that year after year.
Exactly. Whereas what S&P's on average, S&P is like 11% or something. So it's 3 times more than S&P. It's incredible result. And when TradFi guys are learning about it, and now we have all these amazing companies that are creating pathways for TradFi guys to enter by custody solutions, by being able to even buy good example. Ethereum ETF are probably going to be staked soon. This is a great pathway for TradFi guys to come into crypto.
Absolutely.
So there's going to be huge inflow of capital, but an inflow of capital is going to be smart money. And they're going to come for very much institutional kind of play. And those who are mature in the space, who understand how to interact with kind of TradFi Web2 audience, they're the ones that are going to be super successful. So even though memes were a big hype and there were a lot of these degen plays, that was a short-term thing. That was kind of the community's way of saying we don't like the VC game, we want everything fair and square.
Yep.
That was gambling. That wasn't sustainable. When all the BlackRocks, JP Morgans, and the TradFi guys be like, yeah, crypto is big, crypto is here to stay, and we're going to be deploying our not even millions, billions, or even trillions.
Yep.
That's where we're going to see a lot of institutional adoption. And that's where I would say, to kind of answer your question, come the conclusion, that's where kind of also VC game is going to be like. It's going to be more TradFi people coming in to either yield-bearing solution or just investing in more sustainable long-term companies rather than doing this degening, spray and pray.
Yep. I completely agree. I mean, the approach to the spray and pray model, look, the way I'm probably a bit older than you, so I've seen this play out in Web 2 before. The most successful companies in the .com 20 years ago, the first phase of the internet was spray and pray because everything was up only on, when it comes to online. I'm sorry?
Actually, pets.com. If you remember,
everything was going up.
7 years old, and I already heard about it. What was 2002, right?
Yeah.
2002. I was 7. I remember that.
Good. I was 2002. I was 16.
Okay.
So good. 7. Hearing from pets.com is good. Like good. You had a good career in front of you. We're seeing the same thing in crypto. It's the spray and pray model because it's up only, Wild West, no laws, nothing. So you can afford to not do any due diligence. You can afford to, you will get a 5,000x every now and then, and that pays for everything. Of course, as it matures, then you have these venture studio funds that come in and say, okay, let's take 20 projects and let's give them more than just money. So we'll give them distribution, we'll give them branding, we'll give them some of the ecosystem access that we have, marketing you mentioned, of course, and that's another business model, and it's maturing. It's a sign of a maturing market, and that's the direction this will take in Web3 for sure. So I completely agree with you. Question about memes, because people love memes, of course, especially on crypto Twitter. Do you think memes come back Do you think memes get the attention they had last year?
You know, I'll tell you this: lottery has been forever. Gambling is forever. Memes are just the same thing in a different format. There's always going to be people who expect to get lucky, who expect to, become rich overnight. And then we're going to have these people. Memes are going to be there. And the other issue is what I don't like about memes itself is there are a lot of these cabals that just pump memes and they use their community as a liquidity. That thing should be regulated. I mean, if it's a fair square, if someone gets lucky, they get lucky. That's fine. But when you're on a community, that's the worst thing. And what also really ruined the image for a lot of these meme coins are celebrities. All these celebrity coins didn't do well. Give me one example of a celebrity coin that actually did well. None. They all pumped and dropped. So memes will be there here and there as a cultural thing. I think that from time to time we'll see new dog or a cat picture pumping or something related to, political events or just world events. For example, a new pope got elected. There were so many pope coins. Something else happened in the world. That theme, basically word theme related coins will always pump. That's going to be like a very short-term spike. Whoever first to create it, they're going to cash it out. Will the community make money? That's a separate conversation to have. So I don't think memes are going to be there for long term. It's going to be more like a cultural spike here and there, and it's kind of plateau. I believe we're going to move towards this magical thing called projects that have revenue and projects that actually make profit. I know it's very hard concept to understand in this space.
In Web3, it's unheard of.
Exactly. And like business model is not a token. Business model is actual product. But I think that's where we're going to start moving slowly. But like right now, when I talk to founders, and to give you a context, every week I get around 100 pitches. I generally go for like 100
That was actually my next question. This is great. So go ahead. Yeah, pitches.
I'm reading your mind, basically.
There you go.
By this point. So I get around 100 pitches per week. And like now I look at the project. Are the projects sustainable? What's their business model? How are they going to be performing long term? And is there an actual utility of the token? Or is the token just an easier way to fundraise because crypto VCs are stupid and they don't understand anything? That doesn't work this way. So the industry is maturing. More traditional players are coming into the space, and I like that. I personally really love that this industry is maturing because, so in 2016, when I did my first project, I was like 21. Everyone was like, oh, so you're working in that industry. So you're working with criminals, right?
Of course,
like
criminals.
Drugs, everything. Like, sure, of course, 100%. That's exactly what I'm doing. Like, I'm going to all these conferences. I was even speaking I think I was speaking already from 2022. Yeah, I'm going to promote like Silk Road and whatever. No, like that was the vibe of the industry.
Of course. I mean, crypto had a PR problem for years and years.
Yes, it still has it sometimes. I mean, with especially Black Swan events that we had throughout the years. But it's getting better, and I'm happy about it. I want to, be proud. And you know what really, where I really saw the difference? So I go to Davos, World Economic Forum, almost every year. And the first time I went there was actually 2017. I was there with one of our clients. They were doing the crypto play. And I remember when we were talking about crypto, like, oh my God, crypto, no, we don't want to touch it. Like, what is this? Like, it's so bad. Like, I went to Davos. Now, let's talk about last year. Crypto, I was the most popular person in the room because all these like TradFi guys are like, oh my God, we want to enter. We hear about it. We understand where the money is moving, especially when people are losing trust in their governments. And there was a lot of money flowing out of US. I don't know if you saw. I saw this interesting piece of statistic. I literally saw it, I think, like the other day. A lot of money are flowing from US stock market and looking to land in other parts of the world because they just don't trust what's going to happen in US with like tariffs and all the other things. So now crypto is very interesting. Crypto is like a number one topic that everyone's talking about. It wasn't like this before. So as you mentioned, I love the fact that crypto, Mr. Satoshi hired a good marketing agency to kind of fix the PR crisis. And right now the industry is maturing and have more serious players coming in.
What are you seeing on the So what types of projects? You said you get about 100 projects, not in terms of narratives, but I'm curious to see how you've seen it evolve over the last, say, 12 months. You talked about FDVs, high FDVs. What are you seeing? What's interesting to you that you're seeing right now?
So interesting enough, depending on the channel I'm getting the projects, they're very different. So when I go to, and I can kind of walk you through what kind of projects I'm seeing in founders or different channels. So I do a lot of conferences. I go everywhere to events. So when I go to events and founders approach me, let's say I did a panel, they see me work for the fund, they approach me. It's mostly narrative driven. So if AI agent is popular right now, everyone's doing an AI agent. If RWA is hot right now, everyone's doing RWA. Like that's it. And the funny thing is, I think if you're building, when the hype starts and everyone's talking about things, that means it's too late for you to build it.
Yeah, absolutely. Yeah.
Like you had to prepare. Somehow you had to have a crystal ball or predicted trends, or you'd be so quick to pivot that when the trend starts, you already launching. Or like trends are amazing for retail to trade. Amazing. Like if it any kind of trend you hear happening on crypto Twitter, you trade. For VCs to invest, when a trade happens, that's already too late. And those VCs who are investing into trends, I can bet my mind they're not making a lot unless they get incredible terms. And they're basically dumping in the market and they're, rugging the founders. But that's a separate conversation. So conferences, very much narrative-driven founders. Very much narrative-driven founders. Then we also do a lot of deal flows with other VCs. I would say this is where I get the best deal flow because when the other VC is sharing something with you, they don't want to ruin their reputation. So you get really good quality. I would say majority of things we invest comes from our network of other VCs who are sharing it with you. I have a huge network in Asia, in Middle East, in Europe, and America. So I get a lot of stuff there. I would say that's the most quality one. It's mostly infrastructure plays. I would say right now. In terms of narrative, I don't see any gaming projects at all because gaming did very well. Like Godzilla, that was this flagship of gaming. It plummeted, and there are many reasons why it happened, but it plummeted. So like gaming is not doing well. Then I'm very active on LinkedIn. I know it's very weird, but I'm very active there.
It's a very underrated chat. I hate LinkedIn in certain aspects, but in other aspects, it's actually a goldmine if you know how to use it.
So I'm very active there. I write a lot of content there because I feel like I need to educate the founders on how to pitch. I would say if you're a founder and you want to learn how to pitch for VCs, read my LinkedIn. I don't put that on Twitter, just on specific links.
We'll link it to the articles around here. So after the show, just send us the links. We'll link it so everyone can have a look.
Awesome. So I talk a lot about how to pitch for investors, what investors care about, how to present yourself. But the worst thing is, even though I do that, and I always like if someone wants to pitch me, my email is open, like they can reach out to me. This is where I get the worst actual deal flow. LinkedIn has the worst deal flow ever. And that's why I believe I use this platform to educate, because I believe if you're already crypto Twitter, you kind of know a thing or two. If you're starting crypto, you don't know where to go, you're probably going to be still spending your time on LinkedIn. So it's good for me to educate the industry and kind of evolve it, but the deal flow is really bad. Really bad. Like I get these emails like weird, like, hey, I'm raising this amount of money. That's it. Like not even a deck, not even like who is the team. Like sometimes again, I'm just like comical, and I'm like, someone who's
it's painful. It's painful to read. Some of these emails are painful to read.
Yes, but I'm like, I really want to help people. Like someone helped me throughout the years to be where I am now. But I cannot help everyone. I cannot answer 100 emails. I just have physical time. That's why I write some of these stuff. But like, it's really bad. So if anyone is listening and you need a business idea, start coaching founders how to pitch to VCs, because there is a formula. And actually, I can tell you the formula. So you can take a video, screenshot.
Go ahead.
Make it a business model. You'll make my life easier. I'm going to be very happy. So key thing, what you need to understand is when you're pitching to VCs is that VCs are not your friends. They're not charity. They're not grants. It's a business. And our business is 10x's, 100x's to spot, that rough diamonds were in the sea. So key thing, what you need to answer in any pitch, and how you answer is a different conversation, is how you're going to give that 10x to the investor. That's the key thing. How are you going to take, whatever money you want to raise and 10x, because that's the business model of VC. 10x's, not 20%, 10x.
Yep.
And in order for you to answer this question, how you gonna do those 10x's, you talk about yourself in your previous track record. If you don't have previous crypto track record, don't raise from VCs. And I'll tell you what to do instead. Go get a job, get your track record, find co-founders. You need to have tier 1 project experience before doing your own thing. If you don't have it, it's going to be very hard. So your track record and your experience. Number 2 is, what are you raising? Again, this sounds so obvious. How much you're raising? What is the valuation? What are the terms? I'm saying it's obvious. It's not. Apparently,
it's amazing how many people don't even know the numbers that they're raising for.
Exactly.
And wood vesting and Cliff, and they don't even know.
Exactly. Yeah. So then who's on your cap table? Who are the other VCs, angels who already invested in you? Again, sounds obvious. I don't see it sometimes in like those, because basically when you outreach to investor, you have this blurb you send. It has to have all these key things for investor to grab their attention. No one's going to go to your deck. For example, if I get an email with attachment, I don't open attachment because I don't know where it's from. I don't want my computer having viruses. So key things. Who are other on the cap table? And then the most important thing, where do you have, I call it unfair advantage. Means where do you have some sort of proprietary knowledge, access, relationship that for you makes you super, super qualified to do whatever you want to do and succeed. I'll give you an example from other industry. You were, let's say, a producer for all the celebrities. Now you're doing your own record label. You have celebrities as your friends. You're going to be your first clients. That I call it unfair advantage. So what it is that you have that's kind of feels unfair, but for you to have this kind of foolproof way to succeed. If you don't have that and you still want to build, it's not the end of the world, but you don't go to VCs. You go to incubators, accelerators, you get advisors, angels.
Absolutely,
There are people who are kind of one step before the VCs who are going to help you, who are going to incubate you, who are going to babysit to build all of that stuff before going into venture capital. And also when you're building, if you're a first-time founder and you're fresh out of college, I salute you, but you're probably not going to go to Pantera Capital. You're probably not going to go to all the tier 1 VCs. Find the VCs that in your level, because otherwise you're going to be discouraged and you're going to ruin your relationship. And sometimes if you don't have that much experience and you still want to build, find someone in your network in the level where you are. They're going to help you to get to the next level rather than you shooting for the next Pantera, for the next 16C, because they're not going to respond and you're going to be discouraged and you're going to waste your time for something that's going to yield 0 results. So sometimes founders forget there is steps before going to venture capital to prepare yourself, your homework, and then when you come to VCs, they want to talk to you, because in ideal scenario, you want VCs chasing you, not the other way around. And I'll tell you, this one kind of, it's not a secret, but it's kind of an open secret. Everyone expects when you're a VC, you're sitting on this throne, there are these founders coming to you, you're like, you get the money, you don't get the money, you pitch to me. That's completely true. That's completely false. When you're a VC and you think, okay, now I made it. Now, I have this big check, I can deploy. There's not good projects. And you need to give.
And you need to deploy. Yes.
You need to deploy. And not everyone's fortunate as I am when we work for kind of like it's kind of like a family office per se, where we can be slower with our investments. You have to deploy, and you have to deploy well, because your bonus, your career, and your reputation stays on the line. And then you find about these good projects, these amazing, the next Solanas, the next Polkadot, the next whatever, and then you as a VC go to those founders and be like, so I'm this incredible VC. I really want to be on your cap table. I really want to give you money. Can I please give you money? Can I please write the check? Would you like me to be your cap table? Like, that's how actually VC world is. It's not like we're sitting here and everyone's coming to you. No, we come to the best founders because best founders know they're the best. They're already prepared. They've done their homework. They have everything done, and then they can choose which what type of VC or who to accept to the cap table. So you have to, as a founder, you have to be in a position of power that VCs come to you, not the other way around. And yes, it's time to get there. It's not going to be overnight.
I'll tell you two stories. One, so one of the other things that I personally look, whether it's in Web3 or Web2 on the investment side, because I have a portfolio in the Web2 space when it comes to e-commerce and information publishing. Quite a few brands that we co-own. I typically look for previous success outside of the industry itself. Whether I love working with professional athletes. I'm a former professional athlete myself, so I know the mindset and how you're ingrained from a very young age to want to win and want to succeed. That's a big plus. Another one is former members of the military. I feel the level of integrity and work and tolerance to painful work is very high with people who are in the military at a high level. Another story I'll tell you, which is funny, what you just mentioned about VCs wanting to meet the next good founder. Yeah, I was lucky to meet quite a few very good casting directors in LA. Some of my friends produce some of the biggest movies, superhero movies. And it's funny because I met a lot of actors too. And there's this fear, right? You go for an audition, you feel judged, you're naked, you have to perform the script. It's very scary. And the more you talk to these, it's the same thing with these casting directors and these producers. They hope their worst nightmare is sitting in front of 200 auditions and looking people fumble.
Mhm.
They hope that the next one coming into the room excels. They pray for that. They want to find it so they can go home to their wife and just have fun, see their kids. They don't want to be in audition rooms. And so when actors understand that, hey, these guys are actually looking for good performance by me. It's the pressure is actually on them to find someone good because the studio head is bringing down their neck to cast someone. It changes. It's the same.
Same thing, exactly. Like I want a good project. Like if I find a good founder who invests in, I'm happy. I did my job.
Yep.
I don't need to go for these 100 pitches. I don't need to sit on these calls. I found someone good.
Yep.
Like it's exactly the same. I want projects to succeed.
Yep,
And like
absolutely.
very quick thing that I want to kind of give the last piece of advice for anyone who's listening if you're a founder. So I go to a lot of conferences. These founders approach me and they start to pitch me. Again, they approach me. So they want to pitch me. I listen to them and I start asking questions. Again, I've been to this space almost 10 years. I have my own market agent. Like I work with all the biggest brands in the States, like some of the top 20 CoinMarketCap projects.
Yep.
At some points were my clients, all the largest exchanges were my clients. Like who are the largest ones? They were my clients. So like maybe I know a thing or two about this space.
Yep.
A tiny bit, and I listen to these pitches and then ask questions. So did you think about this or that? Like how you're doing this? And then they take it as like personal attacks. Like I'm telling their baby is ugly. And I'm like,
yes.
I'm here to help you out. I'm spending my time. I just
Yep.
did like a keynote of 20 minutes in front of like 1,000 people. I'm tired. I don't want to be here. I want to maybe like chill or talk to my friends. I'm here spending my free time listening to you and trying to give you an advice on how to maybe improve something. And you're taking this as a personal attack. A lot of founders are super ego driven. I spend a lot of time in Dubai and like it's especially a Dubai problem. I see it less in other places, but Dubai is especially like so many ego driven founders when they come, they pitch and maybe you don't like their project for whatever reason, try to give them again, very, very kind feedback in a nice form and they get pissed too. And then you're like,
there's a lot of insecurity too, especially by young founders who, this is all they have, everything they have, and it has to work, and they take it very personally.
That actually it's older who are.
Oh, really? Interesting. Interesting.
No, interestingly, it's the other way
I've
around.
seen the opposite. I've seen the younger founders being very kind of like, oh, who are you to tell us? That's funny. Okay, so no, go ahead with your experience.
So for me, it's different. So usually younger founders are way more open to listen, but the older ones, especially those who I'm 30, so especially those who are like 35 to 45, maybe they feel uncomfortable that someone younger is giving their advice. But like you came to me, I didn't come to you. If you came to me, like you chose this, you can't just like leave and not talk to me. No one's forcing you. And like this is the most bizarre thing was I'm like, maybe I can't invest in you because of our thesis, but it doesn't mean I don't have like 100 VCs for my friends and I can probably refer you. And like there were situations where I would meet a founder. I would really like the founder. I would really like the product. But for whatever reason, our fund would invest in it. Maybe our IC didn't approve it or there was something wrong. Like let's see what the fund, I don't know, investment thesis that we have and the founder what they're building. I would recommend to other VC friends and they would invest. Because I like the founder, I believed in, I like the product, even though I cannot, maybe someone else can. So by being a jerk, you're ruined. You're burning your
course.
bridge of potential meeting to
100%.
other VCs because
Yeah.
maybe. So like this is the most bizarre thing for
Yeah.
me that I never understood.
I'll tell you something else. I mean, of course, for you, it's very different for the obvious reason that you are a girl. It's very different. So, older men have a lot of issues taking, not all of them, of course, right? But some men who are extremely insecure have a lot of trouble working under the direction of women. It's a known thing. And so if they have demons, if they're insecure, that plays another role than the male.
Yeah, but then like don't come to me. You approach me. Like,
Of course. Yeah.
you approach me, you want to pitch me, just
Yeah.
don't.
Yeah.
Like, sometimes when they're like, you don't have to talk to me if you don't. Like, literally, there was one time when there was like the person got really like unhappy, and I'm like, you don't have to talk to me if you don't want to. Like, we can end this conversation now. I'm trying to help you. If you don't want that, like, there are like 100 people in this event. You can talk to instead of me.
Yeah.
And like,
absolutely.
The most bizarre things sometimes happen in these crypto events.
Yeah. Yeah. We have a few minutes left. I have to ask you the very last question that the audience wants to know. You have to get your crystal ball out because the question is the question that every guest gets it. What do you think of pure price action when it comes to this cycle, the next 6 to 12 months? How are you seeing this cycle? Joking aside, what's your take on what would happen in the next 6 to 12 months?
So before I answer this question, I need to kind of give you a few points. So what I'm saying is my personal advice. It's not representative of my employer. Crypto is a very volatile industry and you might lose all the money. And again, it's my own personal opinion, not reflection of my employer and everything what I've said. But
the audience will not sue you.
Yes.
Give you that guarantee. They know it's high risk. They know
No, it's more like
you're good. You're good.
As a C-level in exchange, if I talk anything about price action.
Yeah.
So basically, I'm not going to answer that. I'm going to answer it differently. So in the end, right now, US is still dominating crypto market when it comes to price action.
Yep.
If tomorrow SEC says crypto is amazing, we love it, that's going to have better impact than probably any other nation saying that crypto is okay and good and we accept it. The head of your state has a track record of making sure that everyone who's his friend is going to make money, is going to be feeling comfortable. That's number 2.
I'm not American, by the way.
You're not American. Amazing. But we have a lot of... Where are you from?
I'm Switzerland.
Ah, lovely. But you're based in the US, right?
No. Based in Europe.
I'm
Europe
based
and Middle East. Yeah.
Okay, good. But you spend like a lot of time in the US, right?
Yes. I mean, at least a few times a year.
Okay. So,
but you're absolutely right about Trump. 100% right about his psychology.
The people who can be passed as American saying, no, I'm not American. It's like Canadians always say, oh, I'm not American. Like, I'm Canadian. Because I spent a little time in Canada before. Like, it's just a funny thing. So, like, that's how it is. And number 3, he doesn't want to be a president who, fuck the economy. He doesn't want to do that. So putting all of these 3 things kind of in perspective, plus, everyone kind of hates tariffs, but US has a huge debt. And the way, and like, it's a crazy idea, but I was listening to a lot of economists, and there's this one very good economist on YouTube from Belgium who talks a lot about these tariffs and everything. I highly recommend for everyone to watch it. Basically, they want to lower the debt, and they want to maintain the economy. If the economy is doing good, and everyone is pumping money, and the president is very much pro-crypto, institutions are already putting a lot of money, but I know there's going to be more regulations coming in from US. There's going to be even more crypto favorable. What is it going to do to the space? It's going to send a very positive sentiment. What does a positive sentiment mean? The price action. So if there's going to be no black swan event, I think we're going to see a much higher price. And if that higher price is going to come not just from institutions, but retail coming in as well, and retail is comfortable, if retail is going to drive all-time high, from there, we're going to have an altcoin season. If it's going to be retail-driven all-time high, not institutional-driven all-time high. That's very key thing. We're going to have very, very good altcoin season. When is it going to happen? Probably within next 6 to 9 months. But this is speculation. This is me having crystal ball.
Yep.
And in the end, if I would be in Oval Office, I could tell you.
Yep. I completely agree. Actually, this is another last question, because you're in between, right? In between on the institutional side, because you see the venture deals, but also on retail, because being, of course, at Gates. What is, if you have to compare and you can think of different data points, whether it's volume or interest or general kind of sentiment, where is, because I talk about the fact that we haven't seen euphoria, anything close to 2021. What are you feeling, seeing, based on interest, compare it now this year compared to to bull cycle 21?
In terms of institutions or retail?
Retail, pure retail now. Yeah.
Retail is much more involved right now, but liquidity is way more scarce. That's the problem. Like, if we would have this much interest from retail right now in a previous cycle, there would be much more millionaires. The retail is there. The markets are, like, now we have Pakistan is opening. Pakistan is more than 100 million people, all young, all speaking English, all tech savvy, have access to internet and phones, and you need only a phone. Like, it's a huge market. It's opening. Vietnam is a huge market. Thailand, like, changed some of the regulations as well. Now US are like, we have so many different markets opening and being super pro crypto. Retail is there. The problem is, even with all of these meme coins, I think meme coins were the bad thing for the industry, because in the end, there was a very interesting piece of statistic that I found. I think it was 5-6 months ago. It's not fresh. So there was a set of how many people made more than 1 million on pumped up.
Yep.
Do you know what was the number? How many wallets? And you can track these things.
I think I saw it. It was a few dozen at most, right?
Exactly. It was close to 1,000 wallets only made more than 1 million. Only
out of
wallets.
Hundreds of thousands?
Out of millions, probably.
Millions of wallets,
yeah. Out of millions of wallets who interacted with Pump the Fund, only 1,000 made more than 1 million. So we saw these huge raises. We saw incredible numbers. If only 1 million, more than 1,000 people made more 1 million, what does it mean? That means that all this liquidity got saturated into, someone says, a couple of cabals. I don't like this word. Like, couple of dozen, organizational communities, rather than retail making money. So in the end, retail lost. Meme coins made retail lose money, not make. Even though it was, it is this oxymoron. Like, it was for retail to make money, but everyone lost money there.
Yeah.
So
I agree.
It was a bad thing. It was really, really bad thing for the community, because that liquidity could have went to altcoins. So if someone from meme coins are complaining, hey, where's altcoin season? I'm like, you ate it. Like, that's where it went. So to sum up, there is way more retail, and there was way more interest from the retail. The problem is there's way too many opportunities where to put that money and where to park it. And because of that, the liquidity is just too scarce.
Laura, thank you so much for coming on the show. We'll definitely have you back, especially as the market turns and we see more of this kind of price going up and getting into alt season, which I agree at some point. Retail will trigger that alt season. I think it's more a matter of when than if. And so thank you for coming on the show. We will link everything, all the resources you want to share. We'll link them around the episode, around the articles. And if you have any questions for Laura, send them over. We'll have her back on the show. Thank you everyone for joining the show once again, and we will talk to you. Before we leave, any closing thoughts, any resources you want to send people to? Anything goes.
One last piece of advice for anyone who's listening, till the last point: don't be transactional in this space. Build the relationships. I am where I am because I built a relationship and focus on giving value first, then taking from someone. So as long as you're not going to be transactional, you will succeed.
Yeah. Perfect. Thank you, Laura. Thanks, everyone. And we'll talk to you next time. Hey, thanks for watching. If you got value from this episode, you're going to love what's coming next. So subscribe now. We drop new episodes and videos several times a week. featuring power players, market movers, and insiders from the financial world. And if you want access to deals and insights we only share privately, hit the links in the description and we'll see you on the next show.